As the market processes this news, let's now turn to Dan Ives, Global Head of Technology Research at Wedbush Securities. We're witnessing a small pair of such declines, Dan. Could you describe this as the mic drop quarter you were searching for? You should print this press release and frame it, in my opinion, because, as you can see, this is a stock that will be green tomorrow. They're giving Hopper precisely what the bulls want in terms of overall development, and he will keep falling short of expectations. In terms of final revenue, that might be a 4 in front of it next quarter. With $4 trillion on the horizon, the AI revolution is only getting started. Yes, and you might be absolutely correct in the long run. The market wants the company to beat and beat well every quarter. Therefore, are you not worried about the 2% plus or minus that the company reports on revenue? Yes, this advice would appear if you search for sandbag special in a dictionary. Additionally, I believe that the street will examine it. If you look at everything they've done here in terms of the data center, Hopper, we might be talking 5, 7, or 8 billion each quarter. I believe this is a stock that will likely be up even during the conference call. Many others believed it might just be a few billion. The godfather of AI, Jensen Nvidia, will remain on that Mount Rushmore as all of this unfolds and you begin to examine the numbers over the course of the next, let's say, 12 to 18 months. It simply indicates that Nvidia is the first to play out, followed by derivatives number 3 and 4. This explains why the AI party starts at 9:30 and ends at 10 o'clock a.m. Since you came out with that, has anything changed in terms of time? We're at 9:30 now, although it was 9 o'clock p.m. I understand. The second question I have for you is that, given all of the talk about Blackwell and how production would increase into fiscal 2026, product shipments will start in the current quarter, the fourth quarter of fiscal year 2025. Is Blackwell revenue something that you and investors must constantly reverse engineer from the data center figures, or does Nvidia break it out? In other words, investors basically reverse engineer. However, if you read some of the language there, they are essentially telling you not to worry about any of those heating problems, and I believe that will provide increasing comfort. This will ramp up considerably. As we said during our travel to Asia, the demand-to-supply ratio is 15 to 1, so I believe that's still the case. He's wearing a black leather jacket, and there's only one game in town. Jensen is his name, and I think that's why we're still in the early stages of what I anticipate will be a $4 trillion discussion. You brought up the Blackwell overheating problems, which may necessitate redesigning the servers that house the chips. The servers are manufactured by Supermicro, Hewlett-Packard Enterprise, and Dell. Do they wind up footing the bill for redesigning everything? Yes, but in the end, I believe that to be merely noise. There will always be individuals attempting to disparage you when you're at the top of the mountain because of all the checks we conduct. However, if you observe how Nvidia is handling this situation, there aren't any production problems at all. Because of this, I believe that investors will recognize this AI revolution when you hear from Jensen today. At this point, it's about second, third, and fourth derivatives. Examine the future developments in cybersecurity, software, and the remaining semis. This, together with the clear developments of the past few weeks with Trump, Musk, and everything else we see, is what I believe is going to be a setup for a Santa Claus rally, if you're a tech bull. According to Nvidia, there are now some supply bottlenecks even though Blackwell will surpass supply for a number of quarters. Dan, you checked those channels. Tell us the truth. Where have you observed those possible locations where supply will be limited or bottlenecks? Everyone is at velvet ropes, waiting in line. And as far as Nvidia and Jensen are concerned, there is just one party. You desire those next chips, which is the problem. It's the new gold or oil, and that's what everyone wants. Yes, but that's the client's perspective. I'm referring about Nvidia's ability to deliver things from the supply side. The ramping is happening. Look, it will take time to scale up, just like any new chip or new production. However, I would argue that if you were wondering what the expectations were in comparison to 3 months ago, you sit there right now. Assuming Jensen is piloting the aircraft, you're in 3A, watching Netflix, and you're feeling pretty well. Can Jensen hold his own in terms of pricing power? Is it possible for him to increase the cost of those Blackwell chips even farther than he has already done? On that front, what do you anticipate? And should consumers search for possibly higher costs for those chips? They most certainly can, but market share is the main concern at the moment. They will simply keep moving farther and farther out. You suddenly have $300, 400 billion in ad capital expenditures solely in your sites, even when you consider what the hyperscalers are spending. When you consider sovereigns, private companies, and everything else, it just demonstrates that we are living in a unique, once-in-a-40-year technological trend. Mount Rushmore, Nadella, Cook, and others are Jensen because of this. The hyperscalers at the front of the line are the ones who are waiting to purchase these chips, and you mentioned before that there is a velvet rope. Where do sovereign buyers stand, though, if you include them in the mix? Are they allowed to cross the line? In the center of the line are sovereigns. "Oh, my name's on the list," they remark. It's major tech, though, since you can't get in front of these folks in the front. Sovereigns will enter. They are currently in the middle of the queue. The remainder of the Fortune 2000 follows behind them. For this reason, we will be discussing $4 trillion and $5 trillion throughout the course of the next year or two. We are only at the beginning of this IT boom. Before the show, we discussed in the green room how crucial one particular stock is to a series of trades that determine whether the stock market rises or falls. It's difficult to identify a single business that dominated the world economy or financial markets for literally centuries. There isn't, in my opinion, one that hasn't received some sort of government support. Not as large as this, in comparison, even in 1990. Therefore, it is crucial for those who trade tick by tick immediately following earnings and the call, as well as for those who stand back and consider the big picture. To be honest, this is where American exceptionalism lies. This is the reason why the United States has outperformed for decades or longer. It's the weight of technology in our stock market, tech domination. It's because our Magnificent Seven corporations will spend $500 billion on R&D and capital expenditures over the course of the next 12 months. Put it in perspective. $52 billion was spent on the CHIPS and Science Act. This is a lot of times that. It simply illustrates the extent of our power, of which Nvidia is the foundation. Therefore, to me, it's the structural benefit, regardless of whether they disappointed. All right. Allow me to make a point that I find quite intriguing. What did you say about the estimated $500 billion in R&D and capital expenditures over the next several years? Next year. All right, so just consider that if it ends up costing $450 billion, how do these stocks fare? They're going to drop a lot, like. And you know what I mean. Estimates are rising, so it wouldn't take much incrementally. Finally, if you go back to Microsoft, they are a 19% customer of Nvidia. Correct. We also discussed the increase in capital expenditures. Not long after they reported, it didn't rise all that much. Therefore, the type of step functions that were present, say, 3 or 4 years ago, are no longer present. They also discussed how they didn't have higher revenues because of capacity constraints. Their cloud company is currently expanding 31% annually, which is great, because it is displacing AWS in the market. In the not-too-distant future, it seems to me that we will transition from capacity limitation to capacity overbuilding. Therefore, it indicates that investors still desire exposure when you enter the market and beat these estimates by a slim margin while the equities remain stable. But eventually, I believe it will be one of those situations where you start to see drops in both the hyperscalers and the picks and shovels over the course of a few quarters. But I don't think that will happen anytime soon. The challenging aspect of buying Nvidia, in my opinion, is that if everyone is aware, their growth will slow down in 6 quarters. When do you leave? Of coup.